Folks, every week, and I mean literally every week, I get at least 10 questions asking me, what's the best indicator? What's the best momentum indicator that you use? What's the best time frame do you use? Folks, the answer may not be what you're expecting. Let's talk about momentum indicators in today's video. So you're probably asking yourself, why is this indicator so important? Well, because it can help you multiply your portfolio 389 times. That's why. How? Well, good question. Sign up for this private summit, and I'll show you exactly how to do it. This could have helped you turn $10,000 into $3.89 million in less than 10 years. Don't let any more time or profit pass you by. Click the button below this video now to RSVP. Do it now. All right, so I have very strong opinions about momentum indicators, and folks, you're not going to like what I'm going to say. And I've said this before many times, but in case this is your first time listening to me, I'll say it again. 95% of all indicators that were created for the stock market were created for the commodities and the futures market 40 years before traders began trading stocks actively. Think about it. Think about it. You don't believe me? No problem. RSI indicator, ADX indicator, stochastic indicator, moving average indicator. I just named 4 or 5 of the most popular indicators. Guess what? They were created, invented, tested, and used successfully before anyone ever decided to trade stocks with them. When they were created, the Dow was like a 2000. The fluctuation of an active stock was like 20 cents a day. There was no active trading in the old days. This is before the internet came around. Active stock trading didn't start till the late 90s. So these indicators that you guys are familiar with, the stochastics, the ADX, the Bollinger Bands, all of these cool indicators, they were never ever created for stocks. And that's why they all suck for stocks. Now, they're good for overall trend direction or market bias, but when it comes to picking entries and exit, they suck. The best indicator for momentum is momentum. If you want to see 2 horses in a race and you see two horses being very strong, winning everybody else, aren't you going to assume that they're going to continue winning? If you see a ski jumper, an Olympic ski jumper, okay, and they're doing really well, are you going to assume they're not going to do well, or are you going to assume they're going to continue doing well? If you see 2 dogs in a dog race and they're both winning 20 other dogs, which are more likely to keep winning? The answer to all of these questions are the same. Momentum. Anything that's currently leading is going to be leading in the future. That's how momentum works. Don't think the weakest is going to become the strongest and the strongest is going to become the weakest. I've had some strong momentum stocks stay strong for 6 to 8 months in a row. I'm not kidding you, folks. So the best predictor of future price strength is current price strength. Whatever is strong now will more than likely not exhibit further momentum. So my best indicator for gauging momentum is the most strongest percentage gain over 1 month, 3 month, and 6 month averaged together. I let price dictate the strongest momentum levels. So I don't use indicators to gauge momentum. That's the same thing as driving and looking at the rear view mirror. You're not going to get very far before crashing. So don't make that mistake with momentum. Look at actual price instead of indicators to gauge the likelihood of future price momentum. And I hope that helps. So now you know about my favorite momentum indicator and how it can help you transform your portfolio with double-digit wins. Now I'll tell you how you can supercharge those wins, giving you multiple opportunities to earn as much as 604% on a single trade. Click below now and I'll share with you everything that you need to know to succeed.